The EURUSD currency pair traded in a super-volatile manner on Thursday. The volatility was an unreal 47 pips. This occurred on a day when reports on US non-farm payrolls and unemployment were released, eagerly awaited by traders for a month and a half. As it turned out, the anticipation was in vain. The market remained dead. Of course, we saw a brief spike of emotion within the first 10 minutes after the data was released, but that was where it ended. To be honest, when was the last time the market reacted to significant labor and unemployment reports with only a 35-bip move? Non-farm payrolls reported a result more than double the forecast. The unemployment rate rose to 4.4, which no trader expected. Two major reports, which the market effectively ignored, led to such minimal movement. Therefore, delving into the precise values and their meaning seems pointless. The market does not want to trade, and that's the point. Movements remain completely random as the flat on the daily timeframe persists. On the 5-minute timeframe, several trading signals were formed yesterday, but they occurred after the American data were published when the market was in an elevated state and simply ignored technical levels. We believe there was no reason to buy the pair, as two Ichimoku indicator lines remain overhead. COT report. The latest COT report is dated September 23. Since then, no further COT reports have been published due to the US shutdown. In the illustration above, it is clear that the net position of non-commercial traders has long been bullish, with bears struggling to gain the upper hand at the end of 2024 but quickly losing it. Since Trump took office for a second term as president of the US, the dollar has been falling. We cannot assert that the decline of the American currency will continue with 100% probability, but the current world events suggest that this may be the case. We still do not see any fundamental factors that would strengthen the euro, while there remain sufficient factors that would weaken the dollar. The global downward trend remains intact, but the past 17 years of price movements are now largely irrelevant. Once Trump concludes his trade wars, the dollar may start to appreciate, but when that happens is anyone's guess. The position of the red and blue lines of the indicator continues to indicate the preservation of a bullish trend. During the last reporting week, the number of long positions in the non-commercial group decreased by 800, while the number of shorts increased by 2,600. Consequently, the net position decreased by 3,400 contracts over the week. However, this data is already outdated and holds no significance. Analysis of EURUSD 1H on the hourly time frame. The EURUSD pair continues to form a new upward trend, but it is on the verge of cancellation. The price remains within the sideways channel of 1.1400-1.1830 on the daily time frame, so growth to 1.1800 can still be anticipated within the local trend. However, this movement requires price consolidation above the Senko-Span-B line. For November 21, we highlight the following significant levels for trading: 1.1234, 1.1274, 1.1362, 1.1426, 1.1534, 1.1604-1.1615, 1.1657-1.1666, 1.1750-1.1760, 1.1846-1.1857, 1.1922, 1.1971-1.1988, as well as the Senko-Span-B line 1.1563 and Kijun-sen line 1.1578. The lines of the Ichimoku indicator may move during the day, which should be considered when determining trading signals. Don't forget to set a stop-loss order to break even if the price moves in the correct direction by 15 pips. This will protect against potential losses if the signal is false. On Friday, there are no important events or reports scheduled in the Eurozone, while in the US significant reports on service and manufacturing activity indexes are scheduled, as well as remarks from Christine Lagarde and the University of Michigan Consumer Sentiment Index. However, if the market ignored much more significant reports yesterday, what can we expect from today's reports? Trading recommendations. On Friday, traders may trade from the 1.1534 level. If the price consolidates below this level, short positions can be opened. If it consolidates above it, long positions can be opened. However, yesterday's events have once again proven what we have been stating tirelessly in recent weeks: the market does not want to trade, volatility is low, and logical movements are absent. Explanations for illustrations: support and resistance price levels are shown as thick red lines, near which the movement may end. They are not sources of trading signals. Kijun-san and Senkou-span B lines are lines from the Ikimoku indicator transferred to the hourly timeframe from the 4-hour timeframe. They are strong lines. Extreme levels are thin red lines from which the price previously bounced. They are sources of trading signals. Yellow lines are trend lines, trend channels, and any other technical patterns. Indicator 1 on COT charts represents the size of each category of traders' net position. The material has been provided by robotfx.org.